get more on the pricing of Agribank's IPO. I'm joined by Andy Mantel. He's managing director and the founder of Pacific Sun Investment. Right, first up, Andy, would you be buying them in this IPO? Would you be subscribing?
No. We typically go for smaller mid-cap stocks if we do go for an IPO. So for the large caps, we don't necessarily go for those ones. And for the banking stocks, we're a little bit more bearish on that. With that said, I mean, it's been priced down. And the positive is they're going to list this thing in July, which is going to be a very huge feat.
Yeah. But you know, we do have these news reports coming through that they could be cutting the upper end of the price that they put in there. That can't be sending the right signal out, can it?
Well, they have to. I mean, the other banking stocks have come down. So probably at the mid-range, you're looking at 1.7 times price to book this year for Agbank, which is slightly less than the other higher quality state-owned banks. But again, you know, they're going to get it off the ground, and perhaps it'll match ICBC in size or surpass it a bit. What
concerns you about buying these large banks in China?
Well, this is the last of the legacy banks, so there is a bit of junk in the bank, I should say. You know, when you do the audit for such a large bank for the IPO, you cannot go to every retail branch. So basically, they go to a few provinces and they look at a sample group of banks and they estimate what the bad loans are, etc. So I think there's transparency issues as far as what is really in the bank, and
because it's got the most number of subscribers or customers, hasn't it? I believe. Correct. ABC.
Yes, in 23,000 branches, but still, there's a lot of guesswork to exactly what is in this bank as well as the other ones beforehand. So you're looking at Agbank that has the special mention loans is about $50 billion US, and that's probably matching the shareholders' equity. So you have these special mention loans that later on can become non-performing loans.
No, that's the danger, isn't it, here as well?
Right.
We've seen what happened the other day with Bank China having its shares suspended on the Hong Kong market. They're raising, I think, $8 billion or thereabouts. There's a problem with shoring up these balance sheets, isn't there, generally speaking?
Right, $50 billion for the 5 major banks, probably $100 billion altogether for all the Chinese banks that they will try to raise in this one-year period. They have to raise this money, and that's why they're pushing this through.
Right. Where do we go from here? I mean, it's China as a whole, though. It's I think, one of the worst equity markets in the region. Do you expect a recovery anytime soon?
Well, that's the A shares. I mean, you have so many new IPOs, as you just had talked about a few minutes ago, but that is taking place in China, is taking place in Hong Kong, is taking place in the U.S. So the China growth story is intact. For the domestic markets, I would assume that there'll be more weakness for Shanghai and Shenzhen just because of the large fundraising needs of the major banks and other state-owned enterprises.
Yeah, but if you get away from that, we might be seeing a recovery taking place. So, you know, what's the best way to be? Well, where should you be invested?
You should be invested in small and mid-cap stocks listed offshore that have come down a lot as well this year. And you're looking at some stocks that are probably trading at 3-4 times earnings, growing 30% with cleaner capital market structures.
Right. I suppose you can't name names, but what about the typical sort of industry groups you should be looking at?
Well, we like consumer durables, household appliances, and food and agriculture at this time. So, you know, there is a slowdown coming in China, which is already starting, but that's inevitable. But growth, if you're looking at a downward forecast from one of the major banks this week, they lowered it to 10%. I mean, 10% is still very nice.
But also, as perhaps the economy, as they put it, has rebalanced itself towards the consumer with higher wages. That's why you get involved with the consumer durable side of things and get things which are attuned to consumer spending.
Exactly. Consumer-related companies will definitely be in play for the next 5 years. Higher minimum wages. The renminbi is definitely playing a part, and the focus of the government is to realign the economic structure, and that's what will be the main thesis for the next few years.
Andy Mantel, thank you so much for joining us.
Thank you.
Andy Mantel there from Pacific Sun Investments right here in